Hey everyone, I'm Jeremy Szafron, and this is Kitco News. Be sure to click that subscribe button if you haven't already. Well, gold back in the headlines. Spot gold hitting an all-time high, breaking past that $2,400 level. And all this, of course, while we watch the geopolitical tensions in the Middle East develop quickly with a possible retaliatory strike on Israel by Iran. Now, this could be a significant move that could spark war in the Middle East. Of course, we'll be watching this. And it's clear that investors are looking at gold as a safe haven. You add this with central bank buying, and we've seen a very impressive rally on gold. Let's break this all down, get right to it, and welcome Lobo Tiggre, of course, editor at the Independent Speculator, and no stranger to our Kitco audience. Thanks for coming on, Lobo.
Thank you. I got to jump in right away. A couple of things. One, it's not an all-time high. It's a nominal high. If you inflation adjust, even using the government's nonsense CPI numbers, a real all-time high would be over $3,400 or 35 if I credit Mike Maloney's intraday peak in 1980. So we're a long way from a real high. And I think that's important to stress because gold is an alternative to the dollar. And if it's part of its value is disclosing the loss of value in the dollar, then I think that should be accounted for. The other thing I would say is, yes, the geopolitical tensions are all the headlines right now, but gold's been ramping up now for a couple months. Mm-hmm. And this started, or the sort of hockey stick that we're seeing in the gold and silver stock charts, or sorry, not stock, but silver charts, that happened after October 6th and before this current escalation. So I don't think either can really be seen as the root cause here. And finally, who the heck hasn't clicked subscribe to Kitco yet? Come on, be serious.
Well, you got to. And it's people like you that make this show so darn good. Lobo, I got to talk, though. I mean, obviously, we got the escalating tensions between Iran and Israel. We're seeing these all-time highs, or what would be on the spot market an all-time high. Is that the effect here, or is there bigger things going on?
Well, I think there are bigger things going. Well, bigger. I mean, it's hard to say bigger than something that could actually turn into World War III. Yeah. And I find it striking that as you and I are recording, gold has actually plunged a little bit. I mean, there's people out there pulling their hair out, oh, it's plunging. It's still near nominal all-time highs, but it has retreated sharply this afternoon.
What is the underlying factor here? I mean, let's be specific. You've been talking about this run since October. What's been taking place?
Well, October was the invasion of Hamas into Israel, and the hockey stick inflection is really over the last couple months. So they're not the same event. I do subscribe to the view that many of my peers have that central bank gold buying has been a big factor here. Now, that's not just recently; that's been ongoing. So the more hockey stick inflection point, I do see a new buyer. Now, I don't claim to have secret sources in the CIA or space aliens, monitoring out there on my behalf. So I can't tell you, Jeremy, that I know, this is it. And buy my newsletter and you'll find out the secret way to profit, right? That's just not the way I do things.
Yeah.
But the data tells me that there is a new buyer in this marketplace. Mm-hmm. That the central bank gold buying has propped gold up or held it up when higher interest rates and reduced tensions before October 6th should have been headwinds for gold. The higher dollar, there were a number of things that would have been a headwind for gold. And I'm sure we'll get there, but I think this is part of why the gold stocks underperformed, because there were visible headwinds for gold. And the central banks were buying physical gold, not stocks. So the stocks responded to the macro setting more than gold seemed to do. And suddenly now we have this hockey stick inflection point. I'm hoping that it goes much higher as a gold bug. So what I get from that, Jeremy, is there is a new buyer. It's not just central banks. There is a new buyer. Now, who is he or she? Obviously, it's not one person. I cannot tell you I know the answer to that. You've spoken to Rick Roll, and I'm sure he's told you, and our audience has heard before, that Rick likes to say that the average allocation to safe havens, gold, like gold in global portfolios is on the order of 2%. We're not talking crazy gold bugs buying, putting everything in gold. We're talking about overall global asset allocation over the decades being around the order of 2%. And recently, it's only been on the order of 0.5%. So if people decided that they needed more of a safe haven, not necessarily because of today's news, but just the context that we're in today, That could be the sort of thing that brings this new buyer to the table. Over the last few months, people saying, you know what? We've got two hot wars, either of which could turn into World War III. We've got inflation getting sticky, right? And the world is just the sort of place where a bit of a physical safe haven asset might be a good thing. And that could be your new buyer. And I want to stress one point there. I said inflation being sticky, it's US inflation. And of course, the world is larger than the US, but commodities are priced in dollars. The gold price, I like to call the gold dollar exchange ratio because I think of gold as money, and therefore it's a Forex question. So it famously, though, your predecessor there at Kitco would always, point out to me that gold doesn't correlate very well with CPI. Mm-hmm. Well, that's because it leads. Like when people get afraid, and we just saw the new University of Michigan numbers saying that expectations for inflation have popped back up again, right? So when people think their money is going to become worth less, that's when people start buying gold. Yeah. So this sticky inflation story is really important. The Fed has guided it's going to be cutting rates, and the Paul Krugman told us just last year that we beat inflation. There was a problem, and it's gone. It's done. It's over. Yeah. Right? I don't have the exact quote on the top of my head. Right? But so for people to suddenly say, "Oh, wait! I thought we were told it was over. We don't have to worry about inflation. We're well on our way to 2%." And suddenly, no, it's gone back up to 3.5%. That's the kind of thing that I think can get this missing buyer into the marketplace, right, Jeremy? So that's the short version. And can't give you his ID tag, but there's a new buyer in this space that wasn't there before, and I do see that as very bullish.
Yeah. And they almost seem that they're buying a lot of gold from Costco too. I mean, it seems as though it's not only the flavor of the week, but these new buyers that you're talking about are coming out of the shadows. And I'm curious, could we see a point where gold becomes overbought?
Separate and important points. The Costco sales, I think they're great. I mean, if that's the common man, Costco. Warren Buffett, maybe he goes to Costco because he's still an ordinary guy or likes to play one on TV, right? But the transnationals, the sovereigns, the very large pools of old money in Europe, these people aren't Costco, shoppers. Yeah. So I think the Costco story is great because it tells us that the average person is starting to catch on here. And this is really important because the great parallel in the current market versus the last somewhat similar situation was the 1970s run and the stagflation we saw then. Hey, sticky inflation, 3.5%. That kind of rhymes with the 1970s. But back then, everybody was getting into gold. Your bartender would talk about the gold ounces they bought. Your shoe shine boy would do it. And I know that because I was the shoe shine boy that time. Well, I was a babysitter and a lawnmower, but you get the idea, right? Sure. And I'm, poor man's gold. I was stacking silver at the time because Morgan dollars was what I could afford with my chores money. Right. So that's been missing this time around. We've had high inflation. We've had weak economic growth. People have been making parallels to the 70s, except for Lynn Alden, who likes the 40s. And yet we haven't had the average person getting in. So I think this Costco story is very important, but I don't think it's yet what's moving it. They're selling 100, 200 million a month on the scale of the global gold market. That's really not very many ounces.
Yeah.
So is this the top? Is it going higher? Or do I think it's going? I got to say two things. One, I thought we might get here easily. I've spoken with Michelle and your predecessor. If we just added 10, 20% to the $2,000 range we were at before, it got us more or less to where we're at now. Mm-hmm. But I didn't expect it till later this year. And I did not expect this new buyer now. So I have to, full disclosure, say, I can't pat myself on the back and say, yeah, I was right about gold, 2,400. I didn't give that number either. Yeah. But I expected it later this year and not for the reasons it's happening now. Yeah. So the reason why that's important is not just to do a mea culpa here, but it's to say when something happens and it's not for the reasons that you're expecting, you need to reconsider your premises and your expectations. This new buyer, since we don't know who he or she is, how can we make any kind of reasonable projection for how long he or she will be buying?
True.
Right? So this is tricky. Jeremy. It's dangerous to make projections now. And as much as our gold bug audience would love for me to say, yeah, this is it, it's going to the moon, bye, 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 a la Kramer, right? I have to say the rational answer here is that since we don't really know, and we won't until we have hindsight on this, know exactly who and why is buying, we cannot project how long that buying will be there. Now, the bottom line, Jeremy, is I remain bullish because even if this new source of buying dries up, if it stopped today, as you and I speak, that doesn't change central banks trying to de-dollarize. Right? That trend is a one-way change. China is not going to suddenly want to go back to being dependent on Washington and New York for its transactions. So, that's a one-way change, and that's very bullish for gold. And, the Fed, despite everything, is still talking about, it's just bumps on the road. We're still on track to cut rates this year. And if they stick with that, rate cuts are also very bullish for gold. So my outlook is bullish without this new buyer. Sorry, go ahead.
Right. No. I'm curious. So you are bullish, and for the long term, I mean, is this run going to continue until the end of the year, until we have some data to look back and go, what the heck just happened?
Yes, I think this has legs for the long term, and going into it from such a high base, it's kind of exciting. I remember having this conversation with your peers, and Michelle in particular, and she always is trying to put my feet on the fire and get me to make a price prediction, and that's why I just said, Michelle, just put 10 or 20% on it, see where that takes you. You do the math. But now we're having basically a similar conversation. I remain bullish. And here's a funny thing: I am infamous, if not hated, for being the guy who rains on the parade when a stock goes like this. A correction is the normal thing to expect. Well, in this particular environment, we've had an unexpected tailwind, but none of the other reasons why I was bullish have changed. So, we could be looking at a head and shoulders type pattern. We could have a pause here, but I don't actually see any reason for, any substantial correction. If it got a bit ahead of itself, okay, it might correct a bit. But I'm actually not. A little
bit of profit taking.
Yeah, right. Nobody goes broke taking profits. I just saw, people get so emotional on Twitter. I just saw somebody on Twitter slamming me for posting $2,400 gold. Oh, it's gone. It's over. It's done. It's like, come on. You're talking about an intra-hour fluctuation. We didn't even know where it's going to close today. But okay, say it drops back to 23.50 or something. 23.50? Are you kidding me? That's a fantastic price. It's a price that makes, gold miners, even mediocre ones, gush cash at those levels if they haven't completely screwed up. And the gold projects out there, their price assumptions in their decision-making models, a $2,000 price assumption was an aggressive one. So those projects look great. So I'm actually not worried about gold at all. And I know you'll get there, but I'm quite interested. To me, the big surprise is silver, Jeremy.
Yeah, let's transition into this. I mean, before I let you go, because I don't have you too long, Lobo, what is happening with the silver market? I mean, we're going to see 30?
Well, I think we will, but will there be correction before then? I don't know. That's not the most interesting question to me. The most interesting thing, and I got to say, I was wrong about this, Jeremy. Not because my silver bug friends call me Darth Silver, I'm anti-silver. I'm not anti-silver. I've been as bullish. Well, I am bullish on silver. But even a diehard a silver bug will tell you that silver typically lags at the beginning of a breakout and then catches up with gold, more than catches up with gold. By the end of a bull market, silver's percentage gains are usually higher than gold's, but it lags. And those bull markets, those are multi-year markets. Right? So you're asking me, do I think this has legs? Yes. I mean, historically, a gold bull market is a multi-year affair. And silver lags for like the first year. And this time, you look at those hockey stick inflection points in gold, and silver is right there. There's no lag. And so there are some people out there saying, oh, yes, this is it. Silver's finally catching up with gold. Well, hold on. If this is silver finally catching up with gold, as it has done historically, that means we're approaching the end of this bull market. Like silver catches up with gold at the end. So if your thesis is silver is now doing what it always does, catching up with gold, you're implicitly saying we're approaching the end of this bull market for gold and silver. And I just don't think that's the case. I'm a fundamentalist, not a technical analyst. So I don't agree. Silver's doing something different. I just spoke with Mike Maloney, the gold silver guy, yesterday, and he says there's a new buyer in the silver space.
Interesting.
I need to collect data on that, but it's very interesting. And it punchline here is it really has me reconsidering my marching orders, what I'm willing to buy, what silver stocks I want to be putting on my shopping list, basically immediately, Jeremy. This is really interesting to me.
We've talked about this divergence before on the gold-silver ratio, and Lobo, we were just talking about how some of this data just doesn't make any sense anymore. I mean, it used to, but looking at these historical highs, what are we looking back at? I mean, does anything make sense anymore in that market? Does the silver-gold ratio is that a thing anymore?
Well, my silver bug fans will be happy to hear me say, yes, it does matter. My issue with the gold silver ratio is not that it's insignificant or doesn't mean anything. Of course it does. My issue with it has long been that it's not been a very good predictive tool. Like the fact that the jaws widen on the chart and the gold silver ratio goes up doesn't necessarily mean that silver will go up because it's cheaper. It can be that gold will down to close the ratio. Like any extreme has a tendency to regress to the mean. That's just the way statistics work. But it doesn't tell you which of the two things is going to move and in which direction. So right now, I have my guys, I have my team working on a new gold silver ratio chart because something is different right now. I am having a fresh look at this market. And you just said, all these things are unexpected. Things aren't reacting as they will. So it'd be foolish of me to agree with you and say we're in uncharted waters and then whip out a chart and say, here's my chart. Here's what I'm going to do. I think the most honest answer I can give you, and perhaps the most useful one rather than hype, is this is, I think, very significant. It has me reconsidering my premises. It has me reconsidering my buying that I want to do this year. And I'm having a fresh look at silver right now. It's going to be quite exciting.
So this new buyer that you're talking about, this traditional 40-60 portfolio, these types of things, this new buyer, is that all changing? Is that all out of the window? I mean, we're not doomers, we're not preppers, but people are starting to see data for what it is and getting prepared for something.
It's an interesting way of framing that. And going back to Rick's, 0.5% versus 2%, we don't even have to go back to 2%. If it just goes back to, say, 1%, if 1% of the people around the world, and this is not a digression, but if 1% of the people around the world just decide, you know what, a little bit of safe haven metals, physical safe haven assets in my portfolio wouldn't be a bad thing. That will double your investment demand. That would be a game changer. And the reason why this, I think, is an answer to your question is because that thinking has been gone for almost 2 generations. That thinking, that was a 1970s way of thinking, and it's just been out the window. We've had an entire generation and a half of financial professionals who've seen gold do nothing but gather dust, right? It's a barbarous relic, it's a pet rock, all this stuff for decades and decades. Now, but now flash forward to recent history and something has changed. And I don't just mean right now. We had 2008 and we had the global financial crisis, and gold did what a safe haven should do. At that time, in the immediate liquidity crunch, gold provided liquidity to those in need, which is why it dipped initially. And then it responded as a safe haven asset should and as an inflation hedge should following the GFC. So, okay, people could say, oh, that's one-off or whatever. But we saw that again in 2020. And we saw gold lead inflation, and boy, was gold right about what was coming with inflation. So now, today's financial professionals have this wake-up call of, you know what? Gold actually works. And you can hear this, the talking heads. I mean, I'm not talking you, me, Mike Maloney, whoever, gold bugs. I'm talking mainstream folks on Yahoo Finance or Bloomberg or whatever. And you'll see them literally talking about scratching their heads about gold or saying, well, what else can I do? There is no alternative. Well, maybe we could go with a little gold. I've heard people say that. Like they know nothing about gold, but they're like, oh, in this context, nothing makes sense. I don't know what to do. Maybe gold. Right. So we just need 1% of the people out there to think that way. And that would be a massive inflow. And by the way, this is completely separate from the Fed cutting rates and what that's likely to do to gold, and the central banks, the BRICS countries buying gold, what that's doing. Long story short, markets fluctuate. As you and I speak, was retreating, maybe it retreats substantially, puts a bit of a scare. If that happens, I would see that as a buying opportunity for sure, because almost everything I look at is very bullish for monetary metals. And the silver, breaking with tradition here has me keen to reassess silver and look at adding more silver to my portfolio.
Interesting. What an interesting time, Lobo. When you get that data, you come back to us and you share that with us, okay? I want to know who this new buyer is.
There will be charts. I will be sure to share, Jeremy.
Thanks, Lobo Tiggre, of course, editor at the Independent Speculator, joining us today to break down these prices and this new buyer and the whole gold market. Thanks again for coming on today, Lobo. I appreciate your time.
Thank you.
We'll talk soon. And thank you, of course, to our viewer. Don't forget to subscribe to Kitco News. Go leave a comment. Believe it or not, I do read them. And thanks for watching. We'll see you next time.